Now I'm going to discuss exchange adjustment. Part of LK 16 property plant equipment. Think all the business organizations available land, building, motor vehicle, office equipment like that non-current assets. If those are exchanged, you have to know how to record in the business point of view. Right. Think about this example. This is our economic period. End of the year 31st March 2024. Based on P realistic concept, this is a financial accounts. Information should be provided annually. Account periods, end of the 31st March 24. Right. Think motor vehicle, this example, motor vehicle available trial balance. Motor vehicle available trial balance 90,000. This is a cost value. Think values in 1000. Values in 1000. Motor vehicle available trial balance 90,000. Cost value. And accumulated depreciation also given trial balance 35 million. But think values in 1000. Those are the motor vehicle available in trial balance. Then think exchange. Cost value of exchange asset equal 40,000. Cost value of exchange assets equal 40,000. And exchange value equal exchange value. Exchange value equal 24,000. And paid in cash. Additional paid in cash. Think paid amount equal 36,000. We are going to purchase new asset. It cost value equal 60,000. Think this is a disposal assets. Exchange means disposal and purchase given together. This is cost value of exchange assets and this is exchange date, exchange value. And in addition paid in cash 36,000. Therefore we are going to purchase new asset as it cost value equal 60,000. Right. Those are the motor vehicle available in the business organization. But this is information given for exchange assets. There are more motor vehicle available, but cost value of exchange asset equal 40,000 and exchange value equal 24,000. But we are going to purchase new asset. It cost value equal 60,000. Difference value paid in cash. Right. Then think exchange date. Purchase date. 1st April 2021. And disposal date equal 30th September 2023. Very important this date also. Think disposal date during the current periods. But purchase before this financial year, 1st April 21. This is the purchase date, this is the cost value. And this is the exchange date and this is the exchange value. In addition paid in cash equal 36,000. We are going to purchase new asset 60 million. Think values in 1000. Right. Therefore, this is the exchange date during the current periods. Exchange date is equal 30th September 2023. Exchange date during the current period. Therefore, you have to know how to adjust exchange during the current periods. Right. Think motor vehicle opening balance, those are available trial balance and given accumulation also. And those are the information given for exchange assets. We are going to purchase new asset, it cost value equal 60,000. But exchange asset, it cost value equal 40,000. Again 40,000 cost given 24,000 order dela. Atin 36,000 dela. Alut ekak අපි ගන්න යනවා 60,000 වලට. And this is the purchase date and this is the disposal date. You have to know how to adjust on the financial statement in the business point of view. Right? You have to prepare 5 digit accounts. Think first one motor vehicle, second one exchange, and third one depreciation expense as well as accumulated depreciation and cash accounts. Prepare the digit account from the beginning. This is the motor vehicle accounts and this is the exchange accounts, exchange and this is the cash accounts. And depreciation expense accounts, motor vehicle depreciation expense and accumulated depreciation of motor vehicle. At first one, prepare the pledge accounts and take the balances available in the trial balance. Cost value equal 90,000. Think values in 1000. Values in 1000. All values recorded values in thousand. Right, motor vehicle balance brought forward 90,000, debit side as a BBF. And accumulated depreciation also given balance 35,000. Those are the balance available in the trial balance. There are more motor vehicle available, but this is the cost value of exchange assets. As a result of exchange effect for motor vehicle decrease, think 40,000 motor vehicle decrease and motor vehicle increase 60,000. But think about exchange value, balance amount paid in cash. Step number 1, effect for cost value decrease. Therefore, cost value 40,000, motor vehicle account credit as exchange. And exchange account debit as motor vehicle. Here name of other ledger accounts, motor vehicle, and here as exchange. Second step very important. Think motor vehicle increased by 60,000, but exchange value equal to 24,000, paid in cash equal 36,000. Therefore, paid in cash 36,000 and exchange value equal to 24,000. Motor vehicle increased by 60,000 separately. Therefore, motor vehicle account debit 24,000 as exchange and 36,000 as cash. Very important. Exchange account credit only 24,000 and paid in cash 36,000, cash account credit. Here name of other ledger accounts as a motor vehicle, but motor vehicle account debit as exchange as well as a cash. Disposal and purchase given together. Effect for motor vehicle decrease 40,000 and effect for motor vehicle increase 60,000. But exchange value equal to 24, balance amount paid in cash. Then the purchase date and exchange date. You have to calculate total depreciation from purchase date to exchange date. Right. Therefore, purchase date, disposal date minus purchase date can be recognized how many years used. First one recognized from purchase date to exchange date how many years used. Exchange is 30th September 2023, but purchase date is given 1st April 2021. 30 days it is equal 1 month periods. 1 plus 9 equal 10. Therefore 10 minus 4 equal 6. And 23 minus 21 equal 2. From purchase date to exchange date, exchange assets used already 2 years and 6 months. Therefore you have to know how to calculate total depreciation of exchange assets. Based on cost value, think cost value equal 40,000. Annual rate is given 20%. Depreciation rate equal 20% into 2 years and 6 over 12. It means 2.5, half, 2 years and half. Therefore, total depreciation equal rupees 20,000. This is the accumulated depreciation of disposal assets. Very important. First one, recognize how many years used based on cost value 20% into 2 years and 6 months. That value, think total depreciation included already accumulated depreciation accounts. It should be removed from accumulated depreciation to exchange accounts. Value equal to 20,000. Therefore, think accumulated depreciation account debit as exchange and exchange account credit 23,000 as accumulated depreciation. Think first one cost value and second one exchange value and balance amount paid in cash. Then think how to calculate total depreciation of exchange assets. Purchase date is given, exchange date also given. First one, recognize how many years used from purchase date to exchange date. It can be calculated exchange date minus purchase date. Then based on cost value into 20% into 2 years and 6 months. Right. Now, by preparing exchange account, we are going to calculate exchange profit and loss. Therefore, reason for difference, profit or loss. Take increase side total amounts. Think credit side increase. There is mistake here. Total depreciation equal 20,000. This value should be equal to 20. Accumulated account debit, exchange account credit. Right. By closing exchange accounts can be calculated exchange profit and loss. Therefore, credit side increase value equal 44,000. Take that value debit side 44,000 and difference value 4,000. If difference value available debit side, that is profit. Then this is the exchange profit. If it is given any organization, should be recorded under other income. It may be sole proprietorship, partnership and company. Think exchange. First one think cost value, second one think exchange value and paid in cash. Third is steps accumulated depreciation. Accumulated depreciation account debit, exchange account credit. Now you have to know how to calculate annual depreciation based on matching concepts. Think motor vehicle increase, motor vehicle decrease, and think balance part also available. It is given from the beginning motor vehicle 90,000, but only disposed, and cost value of exchanges is equal 40,000, balance 50,000 available during the current period. Therefore, recognize how many months available each asset during the current period. If it has give the contribution for generate income based on matching concept, depreciation should be calculated. Therefore, up to exchange date, old asset available, disposed asset available during the current period. It has also give the contribution for generate income 6-month period, and new asset also available from purchase date to end of the year 6 months. Therefore, income should be matched with its corresponding expenses. If asset used during the current period, it has give the contribution for generate income. Therefore, you have to calculate annual depreciation. Think how to calculate, very important that part. Right. Think motor vehicle opening balance equal 90,000. That can divide by two parts. Disposal and balance. Disposal and balance part. Very important this part. Think disposal asset equal 40,000. Disposal means exchange cost value. Then balance part equal 50,000. Exchange means disposal and purchase given together. This is a disposal asset, this is a purchase asset. Therefore, motor vehicle available 90,000, but 40,000 decrease. Therefore, this is a disposal asset, but balance part available entire year. And the new asset also. New asset also give the contribution for generate income 6-month period. It cost value equal 60,000. Therefore, new asset cost value equal 60,000. When calculate annual depreciation, you have to calculate based on cost value. Think how many months available. Disposal asset 40,000 available only 6-month period. Annual rate 20% into 6/12. Very important. You have to apply matching concepts. And balance part is not disposal. It has available entire year. You have to calculate 20%. And new asset also available. It cost value equal 60,000. Annual rate equal 20%. But it has also available 6-month period from purchase date to end of the year. Right, then disposal assets here value equal 4,000, and here value equal 10,000, and here value also equal 6,000. Think how to calculate annual depreciation. If this is the value should be considered as annual depreciation based on matching concept. Very important these parts. Recognize how many months available each asset during the accounting period. Then think accounting periods. Right, based on cost value, depreciation should be calculated. What is the double entry? Depreciation expense account debit 20,000. Expense and accumulated depreciation accounts credit 20,000. Therefore, depreciation expense account debit as accumulated depreciation and accumulated depreciation account credit as a depreciation expense. Name of other accounts. Here, depreciation expense. Right. Now, motor vehicle. Think financial position should be recorded, closing balance of motor vehicles and closing balance of accumulated depreciation. But motor vehicle depreciation expense. Therefore, motor vehicle balance should be carried down. Closing balance should be calculated. When preparing financial position, as the motor vehicle should be recorded, closing balance. Therefore, in debit side total money equal 150. Take that to credit side. Any organization think how to disclose on the financial position. Difference value as balance carry down 110. Therefore, this is the value should be recorded under cost under non-current assets. Any organization. Motor vehicle closing balance equal 110. And accumulated depreciation also same way. Accumulated depreciation assets. Therefore, balance should be carried down. Accumulated depreciation also asset accounts. Balance should be carried down. As accumulated depreciation, financial position should be recorded. Closing balance. Credit side total money equal 55,000. Take that to debit side and difference value also equal 35,000 as balance carried down. Think closing balance also equal 35,000. Here as balance brought forward. Right? Then you have to know how to disclose on the financial statement any organization. Think very important disposal permit. This value should be recorded other income. And motor vehicle closing balance should be recorded under non-current assets as a cost. And motor vehicle depreciation normally should be recorded distribution expense. And accumulated depreciation closing balance should be recorded financial position under non-current assets as accumulated depreciation. The effect for cash outs increase, cash increase. When calculate annual depreciation, you have to apply matching concepts. Recognize how many months available during the current period. During the current period, this is a financial accounts. Information should be provided annually. Then when calculate accumulated depreciation of disposal assets, think how to calculate and think how to calculate annual depreciation parts. Those are the value available in the trial balance. Adjustment normally not recorded. Adjustment normally not recorded. Therefore, given balance in the trial balance can be recorded as an opening balance. Therefore, exchange. Exchange can තියෙන asset එක දීලා වෙන asset එක අපි ගන්නවා. ඒතර වෙන්නේ අපි ගාව තියෙන motor vehicle අඩු වෙලා අලුතෙන් motor vehicle එකක් අපිට එනවා. හැබැයි බලන්න දැන් අපි දෙන්නේ 40000 වලට ගත්ත එකක්. කීයට දෙන්නේ 24000 වලට දෙන්නේ. And balance amount paid in cash. Therefore, this is asset we are going to purchase. Cost value of new assets. And this is the cost value of disposal assets. Exchange means purchase and disposal given together. Therefore, very important part of LK16. Part of LK16